Okay, let's get to it. Let's find out what our experts think of the decision. Maudi, we were off air now a moment ago, and you mentioned that the decision is very data dependent, but you raised the question, whose data, overseas or local?
Absolutely. I mean, it was a unanimous decision, 6 versus 1, in favor of unchanged. And I think, it's not surprising. Once again, it's a question of, it's quite interesting that we're seeing a meeting come through on the back of the Fed meeting, which took place yesterday. And if you read into the statements, there is almost similarities, which is the decision going forward will be data dependent. And the question is, which data? Is it the US? If the US improves and they start hiking interest rates, or perhaps start hiking interest rates, what will the Reserve Bank do this side? It's almost a given that they will have, they will be forced to react, because if we start, it becoming certain that the US will be hiking, you will definitely see an outflow of money, out of this country, and as a result, you will see the rand weakening. The impact of that rand will obviously result in inflation, and therefore the MPC will start acting. They will not have an option but to act.
John, it sounds to me like the bank will be once again. This has happened before. They've denied that it was the reason, but to protect the rand.
Well, yes. I mean, ultimately, look, it's not about directly protecting the rand, but the problem is we are heavily dependent on imports in this country. It's a big part of our, indirectly, it's a big part of our CPI, or it's a big influence on our CPI, imported prices. If the rand weakens substantially, that's what's going to happen. You're going to have a flow through into CPI inflation, in the form of food prices, from petrol prices, and that's big. It's from time to time, it's a very big effect. So, yes, CPI is the ultimate target, but you do have to look at all these variables that add up to a higher CPI inflation rate and act accordingly. And if you act proactively, possibly it's better. So I wouldn't say they act directly on US data, but what the Fed does and what the US data does affects us via the impact on export demand and our GDP, but also on what it does to the rand. And so indirectly, we do respond to what happens in big economies like the United States.
The question was posed 1 or 2 meetings ago at the governor. Coordination of policy amongst central banks. Do we participate? Firstly, Maudi, do you think that there's any kind of influence on this through that?
I think, look, there's not direct influence as such, but if the question is, are we currently seeing a coordination among the central banks? I think to a certain degree, yes. Even though, unfortunately, circumstances are forcing them to kind of be, to head in different directions because of different situations that confront them. You've got Europe being confronted by deflation, and you've got the US being confronted by, obviously recovering nicely, from the recession that they experienced in the past. So you've got the US, which is growing. You've got the Europe, which is also facing something which is completely the opposite of what the US is facing. So it's not possible to actually have that type of coordination 100%. But I think, where it can happen, it is happening.
I don't think you can deliberately coordinate. We often follow a very similar cycle because of what we've said about how what happens in the US, for instance, impacts on our inflation via the rand. But there are also local drivers of inflation. She's expressed concern about the wage settlements in this country. That at the moment may have very little to do with what happens in the United States, but it is a key potential driver to our inflation rate. So to our administered prices, electricity tariffs, for instance, do we get a big hike next year again? Those things too are very domestically driven. So it's a balancing act. You've got to take cognizance of what happens globally, what happens to the rand, what happens to import prices, but also locally there are certain factors that are very much domestically driven, which need attention.
So what now? We've had no change. Obviously, we are still in a tightening cycle, although she didn't mention it again. But what now? Are we just going to carry on as was, and will things improve?
Look, according to the forecast, they say they're seeing inflation improve, and they reckon it has peaked in the second quarter of this year. I'm almost inclined to argue that they cannot be sure, and I'll tell you why. I mean, we've been monitoring just from the bond trading. We've seen the outflow, we've seen foreigners selling our bonds, and we've seen that with the expectation that the US will be hiking. There will be. We expect that the bond market to continue to sell off, with the expectation that the yields will be rising in the States, and I think the impact of that, unfortunately, it will be a weaker rand. Yes, you also mentioned, and I think also vital, is the new ESCOM tariffs that will be approved, and I know that what she mentioned is that the impact of those tariffs will be far out in 2015 sometimes. But I think overall we're sitting with a situation where the odds are more of inflation really becoming stubborn more than anything, and it's a question of how will they act going forward. And I'm almost inclined to argue that they will be under pressure to a certain extent to actually have to do a little bit more. It might not be this year, but they will somehow be under pressure to do more.
Inflation staying stable is going to depend a lot on demand going forward.
It's also going to depend.
And you deal a lot with consumers.
Yeah.
Do you see demand actually picking up again?
At the moment, for the foreseeable future, let's talk about the remainder of this year and next year, I really don't see a problem with the level of consumer demand, creating homegrown, demand-driven inflation.
Yeah.
I think it's really about global events at the moment. It's about that rand, and we think that when we get to Fed hiking time next year, we believe that it'll come. If the Reserve Bank doesn't gradually raise interest rates, that would exert substantial pressure on the rand. So that, we think, is key, and our expectation is therefore that early next year they'll start to gradually hike rates again. We're not, and then of course, apart from that, she has intimated again that at some point in future we need to normalize interest rates, and we, as I say, we interpret that as being a positive real repo rate. So we do think 2015 holds more rate hikes in store for us.
That doesn't sound good. Is there anything that we can do to, say, for instance, bring together all the different sectors? Because what we have is wage demands rising. That's a consequence of the cost of living being too high, over-indebtedness, and of course a lot of that cost of living comes from administered prices. So the question really is there a way for people in this country to sit together on a table and make sure that no direct price control, but some kind of price control can be put into the system?
I don't think so. I don't think it's easy to coordinate prices, but I think what has to happen is we need to kickstart growth. A lot of the disruptions from wage bargaining and strike action has a lot to do with anger that's mounting, frustration, and I think a lot of that has to do with weak economic growth. We need to kickstart economic growth, and there are certain bottleneck sectors. I think the electricity is a good example at the moment. You need to change that model from being a protected monopoly, I think, to a competitive structure. And there's a few other sectors like that in the economy. Increase competition in those sectors, improve efficiencies, and reduce pricing power in those sectors, and of course kickstart that economic growth to and drive genuine income growth, not just through wage settlements which become inflationary. I think it can be done, but coordinating prices, I'm not convinced that can work.
Maudi, do you think there's, shall we call it, political will to get this done?
I think there is, and I agree with John in terms of what needs to be done. It's go back to the basic, which is try and concentrate on growing. We almost just avoided a technical recession. We grew at 0.6% in the second quarter, and I think predominantly because we were not at work. We were the whole 5 months on strike. So I think to a certain extent, and I remember Gilmarcus stating categorically that most of our problems are more self-inflicted problems, that we all have the control over them. We need to go and obviously just concentrate on making sure that we improve them, we improve productivity, we improve those issues that are obviously dragging us down, and we can actually see a bit of an improvement in these situations.
I want to go back to something that the governor mentioned about funding becoming more expensive. African Bank she used as an example of why this might be happening, Basel, etc., and so forth. Would that in itself have been reason enough not to hike this time? Perhaps this tighter funding cycle is already having that impact, or may have that impact.
It is definitely a factor. You know, you look at the rating agencies are obviously watching, and you know, they've put us on a negative watch. And what that then does is that it makes it even more difficult for us to raise any form of funding. It becomes expensive. The yields are rising, and it becomes more expensive for us to actually raise any form of funding. And I think those are the impact of precisely all those situations or the problems that we've obviously faced and we need to resolve.
It could play a role. Not sure how closely they consider that fact that with some sources of funding have increased in cost. I think really this decision has more got to do about direct inflationary pressures, which aren't too bad at the moment. Well, it's above the target range, but it's not spiraling out of control. And then also considering that very weak economic growth situation which we have.
Maudi said that, he quoted the governor saying that, paraphrased actually, our problems are self-inflicted, most of our problems. Now, as consumers, there's not much we can do to influence policy, except at the polls. What can we do in our everyday lives to help this country move forward?
Well, I think some of the problems are not, it's not, we like to, as South Africans, we often like to find blame elsewhere, and we often look to government and criticize it for, and it's got its problems, make no mistake, and the parastatals and so on. But when it comes to the consumer, one of the key shortcomings of the consumer in this country is a lack of savings. Part of the big current account deficit we have is, the one way of looking at the current account deficit, gross domestic investment, the difference between that and savings. We don't have enough savings in this economy, hence that big deficit when we try to achieve some sort of decent level of fixed capital formation. The household sector, from its point of view, has to increase its savings rate radically and become less of a consuming nation. That's what we need to do as a household sector, I think, to help with the growth situation, and that's directly in our own hands. Maybe not for the poor. It's difficult the poorer you get to have discretionary income to save, but certainly on the middle and upper income groups it is achievable.
This debt to household income ratio has come down. Will it help?
It's come down. It will help to a certain extent. The question is, why has it come down? Is it because they can't get loans? They wanting to, but they can't. So just I think to reiterate on John's point, it's valid. And again, one's got to raise the point and say you've got the real rate of return, the real interest rates, it's been negative because you've got inflation sitting above the repo rate. And you ask yourself, what is a disincentive at this point in time to save? While we're encouraging the savings, it's kind of a bit of a disincentive, and I think there is also obviously a need for them to start at some point. I think if they leave the interest rates below inflation for a prolonged period, it can actually result in some distortion in the economy. And I think that explains why. To see an improvement going forward, I think we'll have to obviously see the interest rates starting to rise, and for them to encourage savers to actually even add more onto their kitty.
Normalization, does it have much to do with what Maudi just told us?
Well, I think savings is a complicated thing. It's certainly there's not huge incentive at the moment to save in to use the fixed deposit as a savings vehicle. It's very low returns. You don't really win much there. But I think the savings problem is more complicated than that. I think it's a generational thing. I think often you have to have a big crisis for people to become conservative and save, like a world war or a Great Depression. Those generations that lived through that were a lot more conservative. We had a much higher savings rate in the 50s and 60s as a result. We've had it too good for too long now, probably. So it's more complicated to solving the savings issue, but it's something we do need to tackle. If you don't have sufficient savings, long-term long-term growth is achieved by much higher levels of fixed investment than what we have now. You don't have sufficient savings levels from the three sources of savings. You have to fund it with these big capital inflows from foreign sources, that current account deficit, and you just can't always do that. So you are very limited in your in how much long-term growth you can achieve with a savings problem like ours.
This disincentive to save, negative interest rates, it's obviously affecting pensioners the most. Pension fund reforms, will they address the issue? Maudi, you start on that one.
I'm sure they will. They need to address it. I think at this point in time, they're doing a bit of a disservice to those people that are obviously saving and relying on the savings. But I suppose it's a balancing act, Quinton. I think you can't increase in interest rates aggressively just to benefit those that are saving and not obviously be aware of your real situation in the country. That obviously if you do that, you also will be hitting the overlaying debt. And I think it's a balancing act, which I think so far they've managed to actually achieve to a greater extent. It's a matter of how do we go forward in terms of the way forward. And I think, like John said, it's a matter of going back and realizing that growth of 1.5% when you've got 50 million population to feed, it's not enough.
You've got 30 seconds, John.
I think that gradual normalization of interest rates, in other words, slowly upwards, there's a lot of good out of it. The one for the consumer, that's my world, and the housing sector. It keeps the housing market sane. It keeps the speculators largely out, and hopefully it will keep that debt to disposable income ratio gradually declining, which I think is a healthy development because it's a bit high now. So I think there's we haven't done it today, but we expect gradual increases to start next year. I think it'll do a lot of good in terms of getting the consumers to cut his coat according to his cloth.
Thanks for your time, gentlemen.
Thank you.
Maudi Lenzwane from Lehuma Capital.
Capital, yes.
John Lewis from FNB. Well, there we have it. Interest rates stay where they are, and it doesn't necessarily mean that because you're paying still the same on your bond that things are going to improve. In fact, we heard the governor, times are going to get tougher, so try safe.